This is Elon Musk, the richest human on planet Earth. And well, by using those tips you for sure won't be at his level, but this doesn't mean that this video is completely useless. It is going to give you tips to how be less stressed about your finances and do slightly better than anyone else. Now going number 1. Create a budget and stick to it. Creating a budget is like creating a roadmap for your financial journey. It's your blueprint for how you'll allocate your money to meet your needs, achieve your goals, and secure your financial future. But it's not just about creating a budget, it's also about sticking to it consistently. And see you next time. First, start by listing all of your sources of income. This could include your salary, freelance earnings, or any other money you receive on a regular basis. Once you have a clear picture of how much money you're bringing in each month, it's time to track your expenses. List out all of your monthly expenses, from rent or mortgage payments to groceries, utilities, and transportation costs. Don't forget about irregular expenses like car maintenance or annual subscriptions. These should be accounted for too. Number 2. Build an emergency fund. Certainly, let's delve deeper into the importance of building an emergency fund. Building an emergency fund is like having a financial safety net. It provides peace of mind and protection against life's unexpected curveballs. Whether it's a sudden job loss, medical emergency, or a major car repair, having a dedicated fund set aside for emergencies can help you weather financial storms without derailing your long-term goals. First and foremost, let's define what an emergency fund is. It's a stash of cash set aside specifically for unexpected expenses or financial emergencies. This fund should be easily accessible, preferably in a high-yield savings account or money market account, where you can quickly access the funds when needed. Now, you might be wondering how much you should aim to save in your emergency fund. While the ideal amount can vary depending on your individual circumstances, a good rule of thumb is to aim for at least 3 to 6 months' worth of living expenses. This should be enough to cover your essential expenses, like rent or mortgage payments, utilities, groceries, and transportation, for a few months in case of an emergency. But don't feel overwhelmed by the thought of saving up that much money all at once. Building an emergency fund is a gradual process that takes time and discipline. Start by setting small, achievable goals for yourself and gradually work your way up to your target savings goal. Even if you can only afford to set aside a small amount each month, every little bit counts and will add up over time. Now, let's talk about how to prioritize building your emergency fund alongside your other financial goals. While it may be tempting to focus solely on paying off debt or investing for the future, having an emergency fund should be your top priority. Without it, you risk having to rely on credit cards or loans to cover unexpected expenses, which can quickly spiral into debt. Once you've built up your emergency fund to a comfortable level, it's important to keep it funded. Make it a habit to contribute to your emergency fund regularly, even after you've reached your savings goal. Life is unpredictable, and you never know when you might need to dip into your emergency fund to cover an unexpected expense. In summary, building an emergency fund is a crucial step in achieving financial security and peace of mind. By setting aside money specifically for emergencies, you'll be better prepared to handle whatever life throws your way without jeopardizing your financial stability or long-term goals. So start building your emergency fund today. It's one of the best investments you can make in your financial future. Number 3. Pay yourself first. Paying yourself first is a powerful financial strategy that flips the traditional approach to money management on its head. Instead of waiting until the end of the month to see what's left over to save, paying yourself first involves prioritizing saving and investing before anything else. So, what exactly does it mean to pay yourself first? Essentially, it means treating your savings and investments as non-negotiable expenses that come before anything else. Just like you wouldn't skip paying your rent or utility bills, you shouldn't skip paying yourself. One of the most effective ways to pay yourself first is to set up automatic transfers from your checking account to your savings or investment accounts. By automating your savings, you remove the temptation to spend that money elsewhere and ensure that you're consistently putting money towards your future goals. But why is paying yourself first so important? Well, for starters, it helps you prioritize your long-term financial goals over short-term wants and impulses. It shifts your mindset from instant gratification to delayed gratification, which is key to building wealth and achieving financial independence. Paying yourself first also helps you build discipline and develop healthy financial habits. By making saving and investing a priority, you train yourself to live on less and become more mindful of your spending habits. Over time, this can lead to increased financial security and freedom. Another benefit of paying yourself first is that it forces you to live within your means. By setting aside a portion of your income for savings and investments upfront, you're less likely to overspend or rely on credit to cover your expenses. And perhaps most importantly, paying yourself first lays the foundation for financial independence and retirement. By consistently saving and investing a portion of your income, you're building wealth and creating a nest egg that will support you in the future. In summary, paying yourself first is a simple yet powerful financial strategy that can have a profound impact on your financial well-being. By making saving and investing a priority, you'll be setting yourself up for long-term success and paving the way towards financial freedom. So don't wait until the end of the month to save, pay yourself first and watch your wealth grow. Number 4. Manage debt wisely. Debt can be a major roadblock to financial freedom, so it's important to manage it wisely. Focus on paying off high-interest debt first, such as credit card balances, while making minimum payments on other debts. Consider consolidating or refinancing loans to lower interest rates and accelerate your debt repayment. Number 5. Investing is one of the most powerful tools for building wealth over time. Start by contributing to your employer-sponsored retirement plan, such as a 401k or IRA. Consider diversifying your investments across different asset classes to reduce risk and maximize returns. Number 6. Living below your means is the secret to financial stability and freedom. Avoid lifestyle inflation by resisting the urge to upgrade your lifestyle every time you get a raise or windfall. Instead, focus on saving and investing the difference to secure your financial future. Number 7. Track your spending. Understanding where your money is going is essential for effective money management. Keep track of your spending habits using apps or spreadsheets, and identify areas where you can cut back or eliminate unnecessary expenses. Number 8. Stay financially educated. Financial literacy is key to making informed decisions about your money. Take the time to educate yourself on personal finance topics such as investing, taxes, and retirement planning. There are plenty of resources available, from books and podcasts to online courses. Number 9. Plan for the future. It's never too early to start planning for the future. Whether it's saving for a down payment on a house, funding your children's education, or preparing for retirement, having clear financial goals will keep you motivated and on track. Number 10. Stay flexible and adapt. Finally, remember that financial planning is not set in stone. Life is unpredictable, and your financial situation may change over time. Stay flexible and be willing to adjust your plans as needed to accommodate unexpected expenses or changes in your goals. Okay, that is all for this video. Hope you guys enjoyed and I teached you something. Like and subscribe.